I'm diving into the 45-day holding period rule to see if I can really wrap my head around it and explain it in simple terms. 45 days holding period rule. The holding period rule specifies that you must hold shares at risk for a minimum of 45 days or 90 days for certain preference shares to qualify for the franking tax offset. However, if your total franking credit entitlement is below $5,000, the small shareholder exemption applies, and this rule does not apply. This threshold is approximately equivalent to receiving a fully franked dividend of $11,666 for companies that are not base rate entities with a corporate tax rate of 30%. $15,000 for companies that are base rate entities with a corporate tax rate of 25%. To be eligible for any franking tax offset, you must hold shares at risk for at least 45 days or 90 days for certain preference shares, excluding the day of acquisition or disposal. Days in which you hold 30% or less of the ordinary financial risks of loss and opportunities for gain from the shares cannot be counted toward the required holding period. The financial risk associated with owning shares can be diminished through arrangements like hedges, options, and futures. If you acquire shares or an interest in shares and have not met the holding period rule before the shares become ex-dividend, the holding period rule starts the day after you acquire the shares or interest. The shares are considered ex-dividend on the day following the last day you can acquire them to be eligible for the dividend. You must hold the shares or interest for 45 days, 90 days for certain preference shares, excluding the day of disposal, and for each of those days, you must maintain 30% or more of the ordinary financial risks of loss and opportunities for gain from owning the shares or interest. You only need to satisfy the holding period rule once for each share purchase. So, to recap, the 45-day holding period rule is an essential aspect of financial transactions and investments. It can be complex, but understanding its implications can make all the difference in your trading strategy and tax planning. Thanks for watching, and don't forget to leave your thoughts in the comments below. If you're looking for more tax-related videos, be sure to check out our other videos.